price, but the question is whether it's sustainable, and can we say goodbye to those 130 per barrel kind of levels, given that we're almost about to breach 100 now?
Well, exactly right. Good morning. Yeah, I think first off, it is good news. There's the win for the consumer and the retail trader. Secondly, that war premium seems to very much dissipated from the market. We're down from that high of 139. We're now closing on 100. So all that hot air is taken out of the market. I feel as though you could see a bounce, but it was very exhausted to the upside. It's consolidating at this sort of number. It maybe have a couple of more dollars to wash out yet. And where we are, if we don't see any further significant shocks coming out of Ukraine, then we could see another $5 to $10 stripped out quite quickly. But that's an unknown looking forward.
So give us a sense, Peter, as to, what you believe we are also looking at when it comes to the fact that the FIIs have abated their selling quite considerably. What do you think is really going to change and turn the tide and help the FIIs, find India a more attractive market versus some of the other emerging markets and start pouring in money again?
I don't think India's lost its shine in any fashion or form. It's been unbelievable growth over the last, 5 to 7 years, if you're looking at what it's done from Nifty and Sensex. So it's had an enormous run up, and the overall mood in the nation is strong. So I don't think, like any market, they become a point of exhaustion when it comes to timing. Plus, we've had a pandemic, so you throw that into the mix. It certainly was a time to probably shift focus. But as we look further afield and further forward, I'm very sure that India's time will blossom again quite significantly. Strong inflows and stronger than its competitors, equity markets. And the overall appetite for Indian stocks, I think, will be very, very strong over the rest of the decade.
Has seen encouraging talks between Russia and Ukraine. US and China also have had a substantial discussion, quote unquote. But wanted to understand, besides the entire Russia issue, what happens to demand, which continues to remain strong, but limited supply, because it's that mismatch as well which escalated crude prices. Would that settle?
Well, that's the issue, because Russia is such a huge component of world supply, and if you derail them, who's going to fill the breach? Is it going to be UAE, Saudis, Venezuela, Libya, Iraq? There is the challenging point of as far as filling that issue or backfilling. So I don't know from a trading perspective who's going to be the winner out of it, but I do know one thing, that if it's not put to bed, then it will continue to be large volatility swings across that whole sector. So that's the challenge that we all face. Let's hope that it is put to bed quite quickly and we're not running down that pathway. But considering the size of the Russian market, 48% of European gas, 36% of Asian gas, and I think 7 million barrels a day of distillates and oil products that's sold internationally. Monster of a market.
And just last week, we were talking about levels of close to $130 to $140 a barrel on crude. So there definitely has been a substantial cool off. Peter, thanks very much for decoding that with us.